What is so this is going to be another backtesting video. I mean, I'm gonna put it on what I missed. That's a playlist that I've created and I've done another 10 videos like this, backtesting each week. And I didn't actually backtest it from a lot of days before, like a lot of weeks, probably around like 2, 3 weeks. I stopped doing it and yeah, I feel shit about it because I didn't had my trading subscription. So So yeah, that's the reason why I couldn't actually do it. Didn't actually do it. It was a month back, which means 4 back testing sessions. Couldn't be it. That was 1 month ago. So anyways, we'll do it today. So I didn't actually trade NQ this whole week. And let me just show what did I trade for the week. So this was yeah, this is a loss. So that's actually from NQ, and this one is from gold. So basically 2 trades on that day. Sorry, 3 trades. One was obliquely and the other one was 1-to-1. And that was from a live account. So this one is a gold trade. That's pretty nice trade. Like it went up really good. And I just marked out that's a higher time frame PDRA. Mean sweeping out internal highs and then coming back down, giving market structure shift. Again, coming back from this fair value gap and having multiple inverses and lower time frame fair value gap, 30 seconds probably, and then 30-second inversion after that, this trade. And I had a clear break even point up here at 50% off this, from 25 to 50. So I had a good break even point and the target was also very clear. I didn't actually target any PDRAs or any high time key levels. I just traded the whole moves 50%, so which is basically this. So I wish I could show you, but yeah, let me just show it in my X account. Now this is going to be a very, very long video. And on top of it, I am about to get my first day out, which is amazing to be honest, literally amazing to be honest. So that was MNQ, right? Okay, let's just go to gold. Gold was pretty nice this week. Yeah, that's the trade. Yeah, it's over here. Actually didn't take it out. Good executions. That's 15-minute fair value gap, going back into it, and then sweeping out the internal highs. And yeah, there you go. Internal sweep, and then come back down. That's a market structure shift. We had a change in state delivery here, but we didn't actually create any sort of volume candles, like creating any fair value gaps or like inversing some fair value gaps to the opposite side. So that's a that that would have been like if we could identify that, that would have been pretty awesome. But we have a clear break structure and a fair value gap, and inside the fair value gap, we also have an inverse on top of it, lower time frame for PDRs, and then go enter after a lower time frame, lowest of time frame, which is 30 seconds for me, inversion. So that's the trade, clear break even point, and 50% of the whole rally. So that was a pretty simple, nice trade. I could have just actually targeted the whole 1-to-1. But it's okay. We just need a piece of a pie. So that's a Monday, right? That's Monday, 27th of October, which is, yeah, Monday. So on Tuesday, I guess we caught another two bangers and a loss, of course. And that was a over trading day for me. because I mean, I lost almost $490, which is the profits that I made plus $450 minus. So that was a pretty bad day for me. So yeah, Tuesday was a bad day because I was just basically gambling. So anyways, so we do have a confluence high time frame liquidity sweep, and then we have 15-minute fair value gap inverse, and then 15-minute fair value gap, multiple inverses. So we could have actually, this was a clean trade, but the next trade after that, that was after coming back to the 1 hour fair value gap. And yeah, 1 hour fair value gap. And we have a good inverse, that's a manipulation. And we entered on this fair value gap. And I lost almost all the profits. And I took another trade after seeing the same model that I took last night. And it basically came back and stopped me out over here. And after that, gave the whole move that would be my target. And again, on Wednesday was a nice day of trading. So we have a clear liquidity right up here, and we also have the 2%, I mean, standard deviation point, and inside of a value gap too. So that could be a clear target, and I did take this trade. I was about to. I know for a fact that the price is going to go up there after seeing this wick and this tiny 1 minute fair value gap, and I took the trade to the upside and took took profits out at the high. So, anyways, as I always say, the body. So I took out the profits, and the next trade was pretty simple. Uh, 5 minutes inversion, 5 minute inversion, and 5 minutes for value gap. So that's the two confluence that I had on that trade, and it was a pretty simple catch. So after that inverse, we also have a bullish fair value gap inverse. So that's where I took my trade, had my stop loss about the highs, and I was targeting these lows. So I target the body candle open or the close. So that's where it is. I target that and take profit smashed. And after that, we had another trade, which was here. That's a 15-minute fair value gap, 15 minutes. So we are inversing a fair value gap. And I actually got my break-in point, and I broke break even that trade. Almost got stopped out too. Like I would have just got stopped out if I was not looking at it and breaking even that trade, knowing that's a low probability because we didn't sweep any internal lows. So it's just directly bouncing off, and this one's flipped in the loop. So that was a pretty nice trade, and we on the second trade have a 1 minute inverse, another 1 minute inverse. But basically, I was looking all these at my phone, and I didn't actually clearly analyze where it's actually me going and what's its narrative and stuff like that. And by the way, look at that. That's a clean inversion and clear target. So I took my trade around here after the break structure, and yeah, that's pretty simple. Like I almost missed out this whole move because I came in late, so I just took the trade, take profit smash. That was a pretty simple, nice trade, and yeah, that's it. That's it, I guess. I, I lost. Oh, Friday is on NASDAQ. I didn't trade gold on Friday. Even if I would have taken any trades, that would have been, let's go to trader chart. So let me just close it. So by the way, I subscribed to the trading view. And here it is, inversion, London high swept. Do we have any 50-minute fair value? Yeah. Yep. Yeah, one up here, even not that. Close the inversion, right? But look at the last 5 minutes candle up there. Didn't close above. So which means I'm going to take off that 15 minutes and only have that 5 minutes fair value gap. So we are protecting these highs. Literally, these highs have been protected. We can actually also have a potential target as this. Uh, and then look at that, 5 minutes fair value gap being forming. And also this is bouncing off the concept, going 50% of that fair value gap. So we have almost all our confluence. If the price has to go up, it has to sweep this high. If that fails to sweep that and gives you any signs of bearishness, and it's something like this inversion right around here. Uh, Okay. What the? Okay. We have a 5 minutes inversion. So as I said, if the price is heading up, so if we are bouncing off any fair value gap and inversing the bearish fair value gap, something like this. If it's bullish, if it has to inverse a bearish candle. So if it's bearish, it has to inverse a bullish candle. So it's like that. So once on a bullish trend, so we are bouncing off of a 5 minutes fair value gap from 50%. And we also have an inverse. It has to go up, sweep that high, the internal high, the first high that has been created by this fair value gap, before the fair value gap. So it has to sweep it. If it doesn't, and it actually inversing or showing any sort of bearish sign, something like 1 minute market structure shift or 1 minute inversions, multiple inversions, or else 5 minutes inversions, something similar to this scenario. So we are looking to go bearish. So after this, I got 1 minute time frame. And 1 minute time frame's real bearish. The reason why we have the lower time frame internal sweep and then a direct inversion of the 5 minutes of the 5 minutes fair value gap. So if you see all these stuff, and that's pretty much bearish. And if a lot of people would have entered right around here on the channel opens, they would actually keep their stop loss here. If the price really have to go up, it has to come back, give a candle close, or probably if it manages it, it'll actually close below this high. And similarly, like in this scenario, both of them didn't really happen, and we are inversing a funds for like that, which is really awesome. Shows bearishness, and that's where market opens. We are still bullish. So this could be one potential target for me. So let's see. That's an inverse. That's where I enter my first position. Would be right between here. Let me just enter that and keep my stop loss above, and take profit will be this. So that would be the trade. Let's have here, keeping the stop loss above, and then take off here. Let go. The reason why I got stopped out is we don't actually bounce off any fair value gaps. So literally look at the 5 minutes. So that's what happens. Let's mark out this for the minutes fair value gap. Go to 1 minute. I still don't have anything but this breaker block right around here. Look at that. My entry will be this. Stop loss about there. And target will be that. This one hits for sure. Price inverses this. We are breaking even that trade. Pretty nice. Solid break even. Still, I mean, we could actually take some partials right around here, but I won't ever do that. But I'm just saying that can be a good potential partial stage. So let's see. We also created 1 minute fair value gap right here. And we also look at the numbers. No, Kramer says that's a good potential reversal point. So as you say, as you can see, price went up, creating a whole range, and we are breaking very aggressive on the 25%. If the price does that and it goes back up again, reaches any sort of fair value gap inside that 0 to 25 zone, and then coming back down pretty aggressive, easily coming back to the 75% of that whole range. That is a sauce. So that's what I've been recently putting up, adding confluence to my entries. So let's see how this one plays out. I'm keeping a clean target. Not, I'm not getting greedy or something like that because sometimes price come back to almost to the end of the take profit and it reverses because of any sort of lower time frame order blocks or any other key zone at a lower time frame. So that would be a good potential reversal spot. So for that case, for that scenario, I'm actually having my stop my take profit in a clear zone. So which can easily get tamed by the price. Well, I didn't expect that. So let's see what happens if we don't break even the trade. Oh man, where's my trade? You know what? I got break even. I'm not gonna take another trade. So that can be a lesson. Let's see. Why did it bounce? So we are from this zone, right? Let's see. That's the range. Look at that. 50% reason why the price came back up. to the break-even point. And if I mark out this one, would also be that. So again, it reversed from that after hitting the break-even point. So yeah, everything is numbers. So I should have seen that lesson. So right away, we after sweeping the internal highs and then coming back into the fair value gap, moment fair value gap inversion, that's a clean move. Eventually would have taken out our take profit. But holding through all this is the most toughest job. Holding through all this is the most toughest job. So that is a clear structure, model, everything. We are good at the narrative, clear narrative, but we need to have the risk management and the patience to actually go through this trade. So that for me is a losing trade. Literally look at that after the price. It immediately rejects off that zone, but we don't have any sort of buying pressure on that particular zone. So yeah, we push down. So sellers are really tight. So right after that, that's away from our trading session. So let's go to NQ. So that would have been the trade on Friday. So basically, yeah, that should be it on Friday. I literally didn't see Nasdaq's price action this week, just because price action was utterly bullshit this week for Nasdaq and stayed away because most of the times I lost when I traded all the highs. And also on top of it, I was trading all-time highs with my two first, I mean, express accounts from my futures or from futures, in futures, trading futures. So yeah, so I decided to move to the market which has high potential or higher probability than trading Nasdaq. So that's why I actually went to trading gold. So we are up a good amount this week. So that's it. We are sweeping our London highs. So let's see. So yeah, we this can be a good target. This can be a good target. I think I actually took the trade. Yeah, that was a break even. Be a break even point right there. So yeah, break even that trade and yeah, should have entered again. Slipping at the market open high. That have been another sell. Having my stop loss about this high, targeting maybe here. Oh, the second leg. That was the second leg. And that's also 30-second time frame. Yeah, it's 30 seconds. So pretty much one win on that day, and yeah, I don't have 30 seconds here, and yeah, so that was a losing trade. Reading all-time highs. So that would be a good example. That would be the reason why I didn't trade Nasdaq. I would have eventually got stopped out if I kept trading Nasdaq that week, last week. So last week we didn't have any potential entries or anything like that. So let's see. Inversion, inversion, inversion. We are bearish until this way, one of these fair value gaps holding. So which is happening here. Another inversion. Look at this whole move. That's the 50% of that whole move. 1 more minute. That's not the trading window. 9:30 is the trading window. Let's go to 9 minutes, 9:30. Price has to sweep this high or close above this high in order for it to continue going up. Boom. That's not a problem. Inversion would have taken a trade around here, having stop loss above there. Would have got nowhere. I did trade this too. Wait a minute. I didn't actually journal that trade. Why? Wednesday. Look at that. Oh, the gosh. I don't know how intense we probably is that looking like the same trade on Friday, Monday. Feel like I did trade that market. I don't know how. But that could be a potential trade having my stop loss about that. And I don't know whether I could be having the stamina to actually, or like the mental capacity to actually pull through this whole trade. I would have got stopped out for sure. Wait, I still suspecting that I might have traded on 29. I did trade on 29. Look at that. pretty up on that day. That was the reason why I closed the trade right on there. So I mean, the price action was similar to that trading day. So that is the reason why I feel like I did trade on the uh, 29th of October. So after that, I couldn't actually see any split up, or that's not the session that I would trade. So I'm jumping on to the next time frame. So which is this 15 minutes, and we'll go to the next session. All right, so that's an option. So let's start again. So going up, internal high sweep. I will look for again. I would have looked for selling opportunities right around here. I didn't have my market structure shift or change state delivery, so I cannot enter on that trade. Well, again, that's a no trading day on Thursday or Wednesday, whatever it is. I didn't have my setup or nothing happened as I expected it to. So, so that's FOMC on Wednesday. So good thing. FOMC, that's FOMC. Yeah. And a low has been spec. So this can be the next two targets for me if, yeah, the price. Also get this. If would have and would have done nothing. Okay, that can be a trade. That would be the trade, that would be the break-even point, that would be the target, and this is the inverse. 9-minute inversion too. That's a break-even. We are officially with no risk on this trade. Let's see how this one plays out. I have a feeling that I traded on 29, that's 38, 30. Exactly. Are I able to spot this move? Same, I guess. 31. Oh, should have actually closed the trade up here. Didn't really do it. So paying the price of it. So we'll see how it goes from there. Can clearly explain it here as the price pulling back, coming back another 5 minutes further, 15 minutes further gap. And we also create a range, breaking the 25%. So that's the reason I closed my first trade. And out of that, we are investing at 15 minutes fair value gap, 15 minutes fair value gap, and then trading multiple fair value gaps, multiple lower time frame inverses. After that, the trade, it's a take profit. Could have just let it run on break even to this unfilled 5 minutes fair value gap. I didn't do it. So, anyways, oh yeah. I'm sorry again. So, anyways, that is 31st of October. That's the week. If I am profitable for the week, trading NQ, no. But trading gold, here's the proof. We are up $1,287. So pretty much sitting on a green this week. Two more winning days and I can get a payout. This is the thing that I have actually been praying for, been actually trying to do for the past 3 years. And the 1 year I showed consistency. After 300 plus days, I could basically achieve this 1 week of track record. And I really don't know how to express this, but I feel really good and happy at the same time scared whether I have all the backlogs, all the history of fucking up things. So I'm scared on that one part. And I've been being so light, taking things light for the past 1 week. And for the past 2 days, I've been not actually doing anything. I am sick and sick. So I couldn't actually do anything but just stay at my home and laying down the bed. And on top of it, I'm doing nothing on it. But still, I'm happy that I actually practiced the whole week of NQ, which I didn't trade. Clearly says that I cannot trade all-time highs, and I want to try trading that, but in the future, I would definitely do it. But for now, it's all about getting the first payout and carry on doing the same thing again and again. So yeah, that's it. And I am out. Adios. And by the way, I've been documenting this for like a year, and most of the times I felt like giving up, and but here I am. That's the proof of if you don't actually give up in things, you can achieve anything. So this is not even the 5% of the goals that I've set myself, but this is one of the achievement, one of the 1% achievement, and still haven't got to a point where I can take a payout. But after creating this buffer, I hope so that I can actually go to a payout. And that, that's it. And now I'm out. Adios.